again, I want to create another video for you because there's entrepreneurs out there looking to get access to funding, and they might be declined. There's 27 common mistakes that entrepreneurs make when trying to apply for business funding. Something that we like to introduce to clients is you need to have a fundable business, because the fundable business will be able to overcome these mistakes and these principles that we share while we're on this video. And then we look at the different sources of funding outlined based off of your underwriting criteria. Honestly, you can get access to $250,000 or more in lines of credit and credit cards based off your credit score alone. You can get access to, I would say, a proportional amount of funding based off your cash flow. And then you can get access to funding with the SBA based off of collateral. But we provide the 3 C's through our program. And most importantly, we can overcome the mistakes by using our program, A Fundable Shelf Corp, in order to apply for business funding. Well, why does this matter? Well, lenders and creditors, issuers will often decline you based off of not reading their approval standards. There's a formula that we have to meet if we're looking to get access to a large capital raise, and you might be declined. You most likely will be declined if you don't meet their underwriting criteria. We believe that the formula, the key in understanding of why you're being declined, is based off of the mistakes that you might have made in the past. And we're going to talk about the common 27 mistakes that individuals, entrepreneurs, business owners make. And the point of this, of course, this video is really just to kind of overcome a couple different things. Most entrepreneurs, of course, that come to us will have, I believe, this first mistake. And this mistake number 1 is a business name mismatch. When we look at entrepreneurs looking to get access to funding, they sometimes don't operate out of the same name that's registered with the Secretary of State's office. With that being said, one of the solutions that we would take is use a clean, compliant organization and apply using the business name that is mentioned with the Secretary of State's office. So this is mistake number 1. The second mistake that we see entrepreneurs make whenever they're looking to get access to funding is not being in good standing. You have to have an organization that's clean, in compliance, in good standing. You can check this with your local state comptroller's office or even the Secretary of State's directory. If your organization has been forfeited or closed, if it's not in good standing, you're going to get declined from getting access to funding. This actually happens more often than you think. The third thing that gets an entrepreneur declined is based off a high-risk industry. We see this on a daily basis. Entrepreneurs that come to us that maybe want to deal in ammunitions, bail bonds, check cashing, energy, oil trading, pawn shops, adult entertainment, and even other industries like agriculture, auto sales, couriers, software services, dry cleaners, general contractors, gas stations, hotels, motels, jewelry wholesale, retail, limousine services. These individuals are getting declined simply based off of the high-risk industry that they're in. Something that we use to overcome this using a clean, compliant shelf corp is it won't be in a high-risk industry code. Normally we provide a business to be a business management consultant, but we can always customize it if needed. The fourth thing that prevents an entrepreneur from getting access to a large capital raise is their entity selection. Based off of the source of funding that you're looking for, generally speaking, you want to have a corporation. An LLC obviously protects you and provides more credibility. A C Corp is good for an investor, but ideally you want to form an entity in the same state that your business address is located, okay? The fifth mistake that we see is an entrepreneurs using a social instead of an EIN number. If you're looking to get access to a large capital raise, the business is assigned an EIN number, and you need to use the EIN number to open up accounts, bank accounts. If you're applying for funding, you need to use that EIN number to report the business credit score, etc. We want to make sure that your EIN is also being used to file taxes. And this is something that you need to keep handy. It's very difficult to obtain an EIN number after it's been disseminated to you via online portals or even through the mail, okay? Another mistake that we see entrepreneurs make is not having a proper business address. We see this mistake commonly with entrepreneurs, business owners that are startups, pre-revenue, or generate less than $10,000 per month. We want to make sure that your business address is a real physical address. They want to see brick and mortar institutions. So we, of course, provide a free, unique commercial address through our program. And then something that you want to do is make sure that it can be Googled, right, and actually receive mail through the postal office, UPS, etc. But if you're looking to get access to a large capital raise, you want to make sure that you have a unique commercial address, okay? We provide that for free. The next mistake that we see entrepreneurs make is not having a proper business phone number. If you're looking to get access to a large capital raise, lenders perceive a business phone number as a high sign of credibility. You don't want to use a Google Voice. You don't want to use something like that. You want to normally get a toll-free number, and that's something that we can help you out with for free through our program, okay? The next mistake that we see entrepreneurs make, and this is kind of a persnickety thing, when we see entrepreneurs use a Gmail or a Yahoo to conduct business, it lacks credibility, right, with the lender. They normally want to see a website and an email address that matches each other, and it needs to correlate to your business that communicates your services or the goods that you provide, okay? The next mistake that we see is business owners not using a business bank account. We want to make sure that if you're receiving payments for goods or services, that you receive those payments and deposit those payments into a business bank account. And this is an important issue, especially when you're looking at getting access to a large capital raise. They normally want to look at the last 3 months of business bank statements and tax returns, or business bank statements, last 2 years of tax returns off those bank statements in order to approve a term-based loan, okay? The next thing that some entrepreneurs will face is not having the proper business licensure, right? We're licensed, bond insured to provide the services that we provide. Most entrepreneurs that we see are operating without the proper license, and sometimes even open up a bank account or applying for funding, they want to see a copy of that license, okay? So if you're a plumber, HVAC, accountant, they want to see that license, okay? The next thing, of course, here, I don't know if you can see it too well, but sometimes whenever an organization will come to us, actually, let's make this a little smaller. Sometimes whenever an organization will come to us, we need to make sure that the credit profile reporting agencies are reporting to the DUNS number, right? If we're looking to get access to business funding, we want to make sure that your business DUNS number is matching the business, and we, of course, want to set up that credit profile, okay? On top of that, inadequate business credit scores. We are going to have an 80 plus or higher business PAYDEX score before we apply for funding, and we're going to use the business PAYDEX score of the Fundable Shelf Corp in order to get access to a large capital raise. Without using or establishing business credit, it's going to prevent you from getting access to that large capital raise that you desire. A next thing that you normally see, and just remember there's different sources of funding, the different underwriting criteria. Generally speaking, they want to see a solid personal credit score for lines of credit, credit cards, equipment, or even real estate. We provide free credit repair, so your score should never hold you back, but you want to make sure that you have a proper personal credit score before applying for specific sources of funding. The next thing that you need is collateral. Just know that the SBA needs collateral in order to guarantee the loan. We provide those assets as collateral through our program, okay? The next thing that we need is a business plan. And this is important, right? If you're looking to apply with the SBA, no-doc funding, they want to see a lender-compliant business plan. They want to see what are you using the funding for. How do you intend to pay that lender back? And this is what a lender-compliant business plan is about. This is something that we, of course, will develop for you for free through our program, okay? Financial projections are important. This is also part of the business plan. It's kind of a separate line item. But if you're applying for no-doc funding, right, where you don't have to provide business bank statements or tax returns, you want to make sure that you have financial projections. Those projections are going to communicate to the lender how you intend to pay back the loan or the line of credit after you're funded. We provide financial projections through our program for free. Uses of funds. This is important because this is going to determine how much funding you can borrow, especially with the SBA. The uses of funds are going to determine your overall funding amount. You, of course, want to determine what are you going to be using the funding for. We need to describe this both qualitatively and quantitatively. This is something, of course, we provide for free through our program. Industry experience. They normally want to see a resume. Believe it or not, we can assist you in developing a resume. It's actually going to be built into your business plan. Normally, it's kind of a one-pager. It outlines your experience within the industry in order to get access to the capital raise. Because if you're an accountant and, or actually switch that, say, for example, you work at a snow cone stand or a hot dog stand, you want to become an accountant, you're not licensed, you're not credentialed, you don't have industry experience, you haven't worked as a bank teller or something of that nature, industry experience will get you. We want to make sure that we have a proper resume that we can provide to the lender, and it provides them reassurance that we know that we, of course, know what we're doing, okay? Advisors. Just know that you and your team need to make sure that you have advisors. We suggest that you follow our lead. We want to make sure that you have a CPA. We can, of course, connect you with ours. You want to make sure that you have an attorney, right? This is, of course, going to assist you with compliance issues. We can always refer you to ours. We want to make sure that we have a business coach, right? A strategist, someone that can help you before, after the capital raise. We provide you assistance before and after the capital raise through our program. You might want to make sure that you have an insurance agent or some sort of adjuster in order to provide insurance on your property, your business property, etc. And then you also want to have a technical advisor, right? We provide technical advising and expertise through our program, okay? Just know that we also want to make sure that we have feasibility data, especially if you're doing a large capital raise. Say you want to place a Domino's franchise in the city of Dallas, Texas. They are going to look at, and they want you to provide feasibility data of how many Domino's, how many other pizzas, how many competitors are in the space, what is the census data, how dense is the population. Of that population density, how much are consuming pizza, how much on a fiscal year. They want to see that you have the feasibility to actually use the funding appropriately, and it's not a bust. This is something that we, of course, can assist with through our program, and it's something that we do on a daily basis, okay? Target market. We want to figure out, right, if we're going to build out the business plan, who are we advertising to? We love to advertise to entrepreneurs, small business owners, so those that have issues with their credit, their cash flow, their collateral. We help them, of course, in getting access to a large capital raise. And the target market is pretty immense, right? We have 100+ inquiries that come through our site per day. But you want to make sure that you identify the target market that you want to advertise to and provide your product, good, or service, okay? We want to make sure that we also have financial statements. We can assist you, of course, in developing the financial statements, the balance sheet, income statement, profit and loss. This is something, of course, we do with our program. And, of course, we can also have financial statements as well. We normally build these out through Excel. I mean, if you want to sign up for QuickBooks as a software, you definitely can. Or any other accounting software, they normally generate it on your own without any formulas, okay? We want to make sure that we have adequate insurance, right? It's kind of funny, when we got this commercial address, they want general liability insurance. They want to see that we have insurance on our organization, on our vehicles. They want to make sure that we are protected, both the physical property and our assets are protected. You want to make sure that you have adequate insurance, regardless, of course, if you're trying to do anything with workers' comp, health insurance, life insurance. You might want to identify a solid insurance agent within your area, and that way you can have insurance on your property and your business, okay? We want to make sure that also you have an adequate cash contribution, right? There's different sources of funding, different lenders, but just as an example, if you're looking for a conventional loan, they might ask you to contribute a percentage to the project. Just know through our program, it's okay if you don't have that 20% or 10% or 5% or 3%, depending on the different lenders. We can help you get access to different tranches of capital raises, and we can use that cash flow that's through our capital raises to come up with like the down payment, right? For different projects, for different capital raises. We might need to layer the capital raise and get access to, 10 to 15 to 100,000 the first round. And then, of course, then we can go after sequential rounds of 100,000 up to 5 million. And then even after that, we can get access to 5 million up to 10 million in investor capital if needed, okay? But we want to make sure, of course, that you run your business like a business. You want to make sure that you're not running it like a hobby or something like that. And of course, that's kind of why you would want to work with our team, especially if you're an early stage entrepreneur. You want to make sure that your business is, of course, set up properly. You run it appropriately, use the cash flow appropriately. You save money for taxes, you pay yourself a W-2 income, etc. Okay. Mistake number 26 talks about the wrong business for you. We want to make sure that, of course, if you're looking to get access to a large capital raise, that we use the funding appropriately to grow, scale, buy, or look at another business opportunity. We can use the funding to grow your existing business, to hire staff, buy inventory, that sort of thing. We can buy a completely new other business. And of course, we can always look at other business opportunities, but we want to make sure, of course, that your business is running like any other business does, and it's prioritizing profits in order to get access to larger amounts of capital raises and, of course, to pay your bills, okay? So we want to make sure that you're in the right business at the right time, right place. And then we also want to make sure that we have the right source of funding. You know, our program is designed, there's different sources of funding that we can access. And I think that's the point of our program itself. So let me pull up our website real quick, shelfcorps.com. That way you can see kind of what we do, how do we do it. But most entrepreneurs that come to us will get onboarded in our conference room here. And what we do is we're going to assist them in having a fundable business. What makes a business fundable is obviously overcoming those 27 mistakes that we just talked about. We want to make sure that we have an 80 plus Paydex score. We want to make sure that our business is lender compliant. We want to make sure that we have a lender compliant business plan, a commercial lease, a compliant entity, assets, financial statements, and even credit worthiness. Because if we want access to lines of credit of $250,000 or more, if we want access to equipment financing, buying a company vehicle in the business name, using the business credit, if we want to get access to funding, say with the SBA or even real estate or AR financing or grants or investment capital, we want to make sure that we overcome those 27 mistakes. And if your business is not fundable, if it doesn't have a Paydex score, if it has any of these mistakes, and of course, if it doesn't have this kind of this loan package design, we need to be able to bring one to the table for you. Generally speaking, kind of how our program works, if you're not familiar with us already, what we would do is sign the contract. It's actually listed here on the enroll page. Once you sign this contract here, we'll be able to start allocating the Shelf Corp for you. Let me know if you would get onboarded at our office here in Tyler, Texas, or do it remotely. But then you're going to pay for the program. Just know that we used to charge about $10,000 for this service to have a fundable business, the loan package, and the collateral. We have a grant that pays for 90% of this out-of-pocket cost. Just let me know if that $1,000 deposit is within your budget. But we do plan to increase this cost based off of supply and demand. And what I mean by that is that, we have too many inquiries, enrollments. We want to make sure that we can provide you a Shelf Corp in about 7 days, because it takes about 7 days, about a week, to put your name on everything after we sign the contract and pay for the program. And that way we can apply for funding. And of course, if we're applying for funding, we'd go and lender match. Very simple. Only takes 5 minutes to apply. 2 days to get match. We can talk to lenders, compare rates and terms and fees. Apply for a loan. The guys also provide same-day funding. But we want to make sure, of course, if we're looking to get access to a large capital raise, that we do a couple of things. We want to make sure that we have a fundable business, a loan package, and even collateral to get this completed. With that being said, though, if you guys have any questions for me, feel free to go to our website, shelfcorps.com, read over our information. And of course, if you have any questions, feel free to schedule a call with me, and that way we can get this done, okay? But if you guys have any questions, thoughts, or concerns, please reach out to me directly.